Welcome everyone to HueFin, also known as HueFin News. Today is August the 8th, 2020. Going to give you all this video update for XRP paired against USD on the FOREX exchange. We need to talk. Look like the market FOREX is getting a little bit weaker. We're definitely seeing some hints that the demand that once was on the price chart may have been eliminated. So you guys are at a good location to get an update, prediction and forecast in the market for these cryptocurrencies. And now if this is your first time watching our video, you guys can see our price charts are not confusing, and we're still able to give a forecast on the market as to whether or not where it's going to be the next likely move for cryptocurrencies. So make sure you like the video, share it, subscribe to the channel, then follow us on our website at HueFinancial.com in order to see all of our other price predictions, and it's free, so do it. Now, is X getting weak? The last time I did a video for X was on August the 5th, 2020. We had an expectation to see the trap increase the value for X, and it did. You know, it tagged out around 31 cents 2 days in a row, right there on August 6th, and then yesterday on August the 7th. Now, we had our TP at 30.5 cents. You guys can go back and check out that video that we did on the 5th of August. So 30.5 cents. It wasn't much, but we saw at that particular price that the market for X could find some restriction at that level. So it's about 1.18%. If it's able to tag it out around 31, it's about 3%, 2.94 to be exact. All right, so let's get rid of it. Now, you can see some things occurring in the market for X over the last 5 or 6 trading days. What are you talking about, you may ask? Well, easily you can tell that we are noticing some restriction into the market for X at 31 cents. When you see consistency coming into the market of where the market comes in tags and it hasn't been successful as to breaking it, then that area is restriction. That area is where the trap is not wanting to cross at that particular moment. So for the last 5 days, not including today, but the last 5 days in X, you guys can see that 31 cents, the market could not break above it. So it's simple. That's restriction going forward. We have seen opportunity that the trap has wanted to break above 31 cents, like right here, the 2nd of August, the 3rd, and even on the 4th, the market in X tried to break up above 31 cents and it didn't do it. So that's one indication. That's one clue that the market in X is getting weak. Next one is, you see this line we had drawn on our chart? This is what we were utilizing to track the strength into the market for X, and it broke. It broke yesterday. So in combination of noticing that 31 cents is restriction, and then today the market, well, yesterday the market in X broke this ascending line to the upside. Those are all indications to you to let you know that the overall strength into the market in X, it is changing. We're seeing a flipping occur in the market for X. Now, we need to see the trap break 2 areas of restriction in order to maintain this ascending line drawn on our chart. And there's a difference between both of them of 1 penny. The next area of restriction now you can see is around 30 cents. So now the trap has to overcome 2 areas of restriction in order to really see that strength that started all the way back on the 27th of July to come to fruition. 2 of them, 30 cents and 31. Let's take a look at the market on a weekly time frame, since we got a day and 7 hours left in X before the weekly price bar ends. So if we were to take a snapshot and this current weekly price bar was to end right now, this is 2 consecutive weeks of us seeing increase in volume as well as closing off the highs. Another indication that the market in X is getting weak. So what are you expecting? It's what you're asking. Well, based off everything I talked about on this video, we're seeing some indications that the market in X is definitely getting weak. I'm going to get rid of this ascending line, considering that the market has broken it to the downside. It is not valid anymore. So why make your chart complicated? We're going to adjust it. Since we understand that the trend in X is broken from this upside trend, then that simply means that we might be starting a downside trend. So let's follow that. That's how simple it is. Right? So do that. So we're going to create a downside trend into the market in X now. So we're going to continue to play the weakness in this particular currency pair. We have a downside trend being created and formed, and we're going to play the weakness into the market in X. Okay. So now I'm going to play it on the daily time frame. Now it doesn't mean that we won't see a breakout of this downside trend, but this is just the current sentiment, the emotional feel of the trap. That's all. So let's play it. Right? So we know that 30 cents is restriction. That's the first area I told you that the trapper had to break above. But 31 cents as well as restriction. So we're going to hold that restriction area in X at that particular location. Now, we're going to TP the market in X right here on the lows that came in on, the 3rd of August and even yesterday on the 7th. Okay, right around that particular vicinity is where we're going to TP the market at in X, which is around 28 cents. Now, if that area there that I've just talked about, 28 cents, is not able to be maintained for support, the next area is going to be back down towards 26. Just saying. So keep your eyes open on that too. So this is it. We're going to give you all this expectation of some weakness to enter into the market in X. I'm going to play it to the downside just to give you all the understanding of what the forecast is going to be based off the market trap. Now give us your prediction. Where do you think the market in X is headed over the next couple of days? Leave us a comment. All right, I'm done.